We're going to do a startup pitch session, rounds or whatever you want to call it. Each of the companies will pitch for 5 minutes, followed by 2 minutes of Q&A. It's a, I don't know, a fun thing to do. It's also, there's big prizes on the line. I didn't tell you guys this earlier, but my nickname is Chardonnay Brett, and I will be giving out the Chardonnay Awards. So the top 3 that win today will get Chardonnay from my personal collection. When I say my personal collection, I have 2 out of 3 things I'm planning on giving away. So one of them is going to be you could also get at the bar at the end of the day. So the first 2 are actually coveted prizes. The third one, thanks for coming out. With that said, so as I run a early stage fintech incubator program, so today we're going to have a series of companies we have a network company with Compliance.ai that's going to start us off, that's further along than most of the other companies. And the rest of the day will be filled with companies that have come through. Most of the companies are from the most recent cohort number 3. And we're going to have a great time. It'll be a lot of fun. We got an amazing panel of judges. Our first judge that I'd like to introduce is Ryan Strauss with Thinwick. You just give a... So, Ryan's got a great background as an attorney and a specialty in blockchain and the crypto space. So we're really excited to have him on the panel. Addie has not shown, so we're having the illustrious Jeff Kane, who happens to be in the house from Yodlee, who runs the accelerator program over there. Yeah, he can do it. I am not. I saw him. I'm like, you're my man. Bring it in. So, and then Maddie Callender from Boost VC. So we got lots of golf claps going on. Okay, guys. I know it's a small crowd. I know it's raining, but we're gonna have to bring up the energy in here, guys. Come on. They're what? They're playing golf in that room. Yeah, well, maybe later we'll catch the back 9. Oh, looks like Addie is here. And are you sure? Yeah, Jeff. Okay, you're out. You're sure? We'll get you on a future judging panel. Okay, Addie. Okay, understandable. And so, Addie from Angel Hack has just entered the room. No, we're all on time. It's all good. Okay, so the areas that we're going to be judging the companies on a 1 to scale scale, sorry, I can't speak anymore, is product, traction, and investability, and overall presentation. And the reason why we're picking these categories these are the areas that we focus on with the companies that we work with. So as your judges, as you're looking at them, see if they've established some level of product market fit, do they demonstrate a level of traction, and would you invest in them, or would you introduce them to an investor? And with that said, in a moment we'll hand it over to Compliance.ai. Am I missing anything? Any other? Oh, so 5 minutes of presentations followed by 2 minutes of Q&A from our judges. It's already open? I'll let you.
Thank you so much for your time, and look forward to telling you more about Compliance.ai, what we do, and the problem that we solve. We're a 2-year-old RegTech company, venture-backed. We have a shipping solution, paying customers. We're specifically within the financial compliance space. The problem that we're trying to solve is an epidemic issue that regulated industries face worldwide. They spent far too much of their time chasing regulations, what's happened from a rule perspective, what's occurring from an executive order, what enforcements have been handed down, what white papers have been written by law firms, what do they need to watch out for from a notice perspective, so forth and so on. From a financial services organization, thousands upon thousands of them that we've looked at, on a monthly basis, a compliance professional would have to go through, on average, 3,000 to 4,000 regulatory documents and sift through them, find out which ones are important to them, which ones are relevant, where do they have to pay attention, how do they prioritize, which topics are covered in those documents, and which agencies do they need to follow. It's a problem specifically within the financial space It's a priority to the foreseeable future, and we're trying to help address this and alleviate the pain, make the life of those compliance professionals a lot better. This is problematic, a problem in terms of something that you either have to solve today by throwing bodies at it, so more and more people in the compliance department, more analysts, more people that help in terms of sifting through the content, prioritizing, creating Excel spreadsheets, sending them around as emails, and on the flip side of it, not paying attention to compliance is costly. We're trying to solve this, and we provide financial regulatory intelligence as a solution. How do we do that? We take advantage of purpose-built machine learning algorithms that gather content automatically from hundreds of different sources, bring them together in an easy-to-use research tool, and that research tool ultimately lets the organization say, these are the topics I follow, these are the agencies that are important to me, these are the topics that are important to me from an organizational perspective, split it among the compliance professionals, and then ultimately allow them to search very easily, find the content that they're looking for. Moreover, give them a to-do list. This is what you need to pay attention to today. This is what you need to take a look at by the end of November, because there's a common close date, an effective date, or a date that you need to pay attention to that you haven't done before. In addition, we say, let's take a step back. We've processed millions of records. What do they mean? What's the trend? What can we see from a trend perspective? Which agencies are most active? Where are the enforcements coming down? Where are the judgments being handled? And from that perspective, you get a heat map. Where are the consumers complaining? And you can become much more predictive and make better decisions in the future. We did surveys of compliance professionals. We found some interesting things, but one of the topics that we were looking for is how are they actually solving this problem today? And we found that Google happens to be the top mechanism today, this little search engine in Mountain View, that most of these financial firms are using today. And what they do is they'll go site by site, search, grab the content, put it all together, normalize it by hand, curate it by hand, throw it into spreadsheets, send it to their colleagues, and then rinse and repeat next day all over again. And then when we asked them, how do you actually disseminate this information? Everybody thinks of sophisticated workflow tools. Email was off the charts. Basically, take this content, send it out, and disassociate it from the content, making it essentially obsolete immediately. And topic coverage is diverse, but we saw a strong need for covering cybersecurity and anti-money laundering for good reason. So really the idea is switching these users from a search-based activity to research-based activity that is focused on financial content and provides them comprehensive search and research capabilities in that, as opposed to covering 280,000 documents, you get a very focused view and you rarely have to push page 2. Moreover, being ML-based and behavioral analysis allows us to take their feedback as they're using the product and improve it over time, focused on financial compliance. So beg, borrow, crawl, subscribe, aggregate the content, clean it up, then classify it, rate and rank it through what you know as expert in the loop, machine learning, purpose-built models for the compliance, financial compliance space, topic specific. Seeing is believing. You can onboard the product for free on all the versions that we provide, no strings attached. Take advantage of it, see if it solves the problem that you have, and ultimately find out if it has the type of compliance content that you're looking for. Our content is backed by subject matter experts that help us curate the content and steer us in the right direction. And ultimately, we have traction today within the organizations, a couple of hundred banks, insurance companies, fintech organizations that take advantage of the platform to simplify the way that they deal with financial compliance, regulatory compliance. We provide focused content immediately to these users, and we provide analytics that they can use on a day-to-day basis. The content is immediately available to them. It's highly personalized in that if you're an agency that you care about lending and leasing, that's the type of compliance dashboard you're going to get from Compliance.ai versus another one that's more interested in mortgages or a compliance professional that's tasked with anti-money laundering or privacy issues. They get a different view, highly personalized during onboarding and post-onboarding as well. Not only can this platform be used for financial regulatory content, but imagine a legal document or a disclosure or a contract that you can then drag and drop into Compliance.ai to give you the regulatory landscape related to that document. That's where we're heading next. Thank you so much. Did I do it well on time? Or?
You're right on time.
Okay. Thanks.
Questions from our judges?
Today it's a US-focused, I could probably use this. Today it's a US-focused product. We're now looking at the UK, Canada, Australia, English-speaking countries for the purpose of the fact that the natural language processing engine that we created today has a dictionary based on the English language, but nothing stops the platform from building similar dictionaries in other languages as well. The business model today is a SaaS-based recurring basically license. So you either come in as an end user in what we call a Pro Edition or in a team of up to 10 people in our Team Edition. And we also have a developer platform so that if a firm already has bought some governance risk compliance solution or wants this content to be rendered in their SharePoint or inside their own portal, they can do that as well.
Do you have a baseline that this is built like the CMS or like baseline sort of view of the world that this is built on top of? It can be so that like deeper dives can be done.
So I guess what you would say is we would imagine after having processed so many records and having the behavior and usage of so many users in our system, we have a pretty good baseline of, hey, this organization with this amount asset under management, with this charter, is probably interested in these topics, is probably interested in these types of agencies, is probably going to operate in this many states. So that part we know and we can gather and we become better and better and predictive of that. But then we provide them with analytics to say, for the agencies that you follow, in the last quarter, the SEC has been most active and they've issued this many enforcements. You need to pay attention to that. So there's a baseline, let's call it commonality amongst all companies. But then the moment you talk about an organization that has 4 or 5 products, the type of agencies they follow and the type of topics that they're interested in changes. And that's really part of the value proposition, is that personalization, even inside an organization where you have a large bank, certain individuals are focused on AML, others on lending and leasing, and the regulatory content that they're looking at is very different. So I don't know if I answered your question. There's a baseline and then it's personalized based on the roles of those people in the organization.
Big round of applause for. Thank you very much.
Thank you so much.
Hi, everyone. Hi, I'm Chan Levkovich. I'm the CEO and co-founder of Conversation.one. And Conversation.one is a build once, deploy everywhere platform that helps businesses to build a voice and chatbot applications for all the leading devices and services, such as Amazon Alexa, Google Home, and Facebook Messenger. Let's take Chase as an example. By logging onto our system, Chase can create their own voice and chatbots in 3 simple steps. First, they select their industry, banking in this case. And by selecting their industry, we connect them automatically to a pre-made template that contains dozens of ready-made questions supported by thousands of samples. Next, they choose their name out of 10,000 different financial institutions that are pre-integrated in our platform. And by choosing the name there, we connect them automatically to their own APIs. In the next screen, they choose the device that they want to support. It can be Google Home, Amazon Alexa, Facebook, or their own chatbot. And that's it. From now on, every Chase customer can say, Alexa, ask Chase what is my balance, or pay a bill on Facebook, or just say, hey, Google, how much I spent on shopping last month. So we helped our customers to build their voice bots, but very quickly, we understood that this is only the first step in the process. So I guess you're all familiar with this. I don't know how can I help you, response from Alexa. So to make sure we do know how to help you with that, we built a machine learning system that constantly listens to the conversations between the end user and the devices, detect the failed ones, reclassify them in real time, and push them back into the system. And the result, 100% increase in the understanding of the devices. So the conversational market, the voice market, is just in the beginning, but growing very fast. By the end of this year, 50 million Americans will use voice devices. By 2022, 50% of the US households will own one. And Gartner named conversational application as the leading trend, one of the leading trends for 2018. Of course, businesses will have to spend money on developing applications. Our first addressable market, the B2C FI applications, is estimated at $1.5 billion a year. Our business model is simple. It's SaaS per user that use the system per month. As said, we have different applications for this platform, but the first one, our go-to-market, is through financial services. And a package for a smaller credit union, for example, would start at $10K a year. We launched our MVP at the end of June. 3 weeks later, we signed the first customer, a credit union from New York. It's actually live now, both on Google, the first one worldwide that launched a Google action, a banking Google action, and they're also live now on Amazon. Last month, we were certified by Amazon to launch financial institution skills. We were the first platform to be certified for that. We already engaged, highly engaged with 30 other FIs, meaning we had phone calls, they are POCing our platform. We've partnered also with Google, we've partnered with Facebook, now we partnering with Microsoft, with Twilio, and next month we present in New York in an event, a core banking partnership with one of the leader vendors here in the US. We're also very excited by the traction we see on our platform. So we were growing 50% month over month with users signing up on our dashboard. It's free for everyone and open for everyone to just join and build their own voice bot as they wish. As I said, there are different applications for Conversation.one, banking or FIs is one of our applications that we focus on. And actually this month we expect to see 100% growth from new signups. Our team has more than 50 years of experience with developing, selling enterprise platforms and AI systems in companies like Checkpoint, Kodak, and AT&T. And we have an exceptional R&D team. We've built business partnerships with tech vendors in the US and outside. We're currently raising funds. We raised $2 million that will help us in the next year to sell our platform to 40 new FIs and reach $1 million in MRR. Thank you.
Question about just how a user would use your product. Do you still have to log in? What's the security around applications on Alexa
That's a good
for your banking?
Yeah, so the way it works, so basically when you use Alexa, you can just talk to it, it talks to you back. On Alexa specifically, you have to activate skills. It's like they have like an app store. On Google, you can just say and it's automatically activated. If you want to connect to your own banking account in this case, you need to log on to a form. That's something that we provide automatically, also branded for the bank. You put your bank credentials and you select a PIN code. And the PIN code is later used when you talk to the device. We verify that it's you because currently the devices still can't really authenticate you on your voice. So let's say you will ask, Chase, ask Alexa, ask Chase, what is my balance? It will ask you for your personal PIN code. Once you provide, you get the information.
So it kind of seems a little bit like a feature business. So how do you compete with, just like a bank like doing this themselves instead of going through you guys?
Yeah, first of all, we are B2B2C business. We don't provide the consumer application. We sell it to the banks themselves. So instead of developing it in-house, they can launch it with our platform quickly. you know, in the US, there's more than 10,000 different FIs. Most of them don't develop anything by themselves. They prefer to take ready-made solution and launch them. So that's like the best solution for them. When we talk about the bit larger ones, so in this case, they have in-house developer. That's like maybe the top 1,000, even less. The value proposition for them is, first of all, being able to launch it on all the different platforms, so being like an omni-channel solution and not just one solution by itself. And I think the most powerful part of the platform is the machine learning component. So basically, let's say you're a huge bank, you launch an Alexa solution. So you developed it, maybe invested a year, like Capital One did. But now you collect lots of conversational data that you can use to improve the conversation. If you do it manually, you probably need a team of people to take a look at the data and classify it. We do it for you.
Do you aggregate the data and use it for any of your own purposes?
Yeah, so
other than improving your AI?
Yeah, it's a good question. Yeah, so the data that the conversational data that we classify, we have 2 layers of, we call it like a community level, where if you are a smaller bank, you contribute to community. We also, you get it back also. So if we collected the sentence for checking balance that we didn't know in advance from one bank, others can use it. The larger ones, they don't want to share anything, so they have their own closed box. But in the future, one asset that we see for the company as a revenue stream is to sell the classified data to other banks. The classified conversational data. The conversational data is basically sentences that lead to a specific action. What's my balance? How much money I got? So all this ontology that we collect over time, it's something we can resell later. Thank you.
Greetings. I am Matthew C. James. I'm founder and chairman of Transaction Hub. We're focusing on AliasID to resolve the identity issues and problems with blockchain-based transactions. So the core problems we look at with public identifiers is that they're a string of randomly generated numbers and letters, up to 34 or more characters in length, and they're difficult to use and manage. Now with that, they're uniquely generated for every user. They're uniquely generated for every type of crypto coin, and there currently are 1,100 or more types of cryptocurrencies out there. With that, you have a reputation problem. There's no way to have a consensus based on positive or negative transaction history or ratings per coin, which can likely end in loss of sales or earnings potential. So what we did with AliasID is a simple solution. AliasID resolves the public identifier problems. As an example, you can use your mobile phone number or a custom word name or even an emoji or images that's globally understood and easily recognizable. It's simpler to use and maintain and manage. It's generated by you, not by the actual blockchain company itself. With that in mind, now you have a single-use identity across all types of cryptocurrencies, all coins, all blockchains, because this integrates with every type of coin, wallet, or blockchain. So by building out your positive or negative transaction rating against all coins, all types of blockchains, there's even more and more use cases. There's over 1,100 types of cryptocurrencies, and blockchain has multiple use cases. And you can increase your sales and earnings potential using AliasID. So let's see how it works. Using it is very straightforward and simple. You simply go to our website, alias.id, register. Any email or mobile numbers for free. You can obviously upgrade to a premium AliasID, which is a word or phrase. The next step is linking. You simply link your public identifier, which you've been issued by your blockchain company, and next you just use it. Again, our platform integrates with any type of wallet company, any type of blockchain platform that's needed. So next, we're going to look at our business model, how we do business. For free, you get your AliasID, email address or mobile phone number, or you can upgrade to a premium AliasID. Your premium AliasID is actually words, phrases, or emojis at the same cost for domain names, and also through affiliate orders. So all accredited domain registrars, coins, and wallet companies are welcome, and they earn a percentage of the sale. Up next, the size of our market. Well, we're aiming for 1 billion unique public identifiers by 2024. Now, currently with blockchain, we're really focused on fintech. But blockchain has multiple use cases. As an example, Internet of Things. These will all have public identifiers which you can use in enterprise level to create your own naming convention, naming schema. So our fintech market strategy is first interact with the crypto wallet companies. We're reaching out to them. We're also reaching out to the ICANN registrars. I don't know how the image got in there, but we're reaching out to all the accredited ICANN registrars and the crypto coins in existence. These will be our major players and partners in this process. So the competition. Of course, we have competition, but it's good because it proves that we're in a industry, in a market that's definitely needed. With one name, or Blockstack, there's also a competitor called ENS, or Ethereum Name Service, basically for the Ethereum blockchain network. We maintain anonymity. You can use your email address or mobile number for free. Custom words or phrases, images. There's no added transaction times during your blockchain-based transaction. No plugin required. It's coin agnostic, and again, tons of other blockchain use cases. Our team, I'm over there at the end. I'm the founder and chairman. Paige Howe is our VP of AliasID. He's made millions in the domain name sales and registration business. Vladimir is our CTO. He manages and maintains our development team out of the Ukraine. Bill's our computer scientist who's a DNS with DNS expertise. And also Irina. Irina is a former PayPal analyst with 10 years of fraud and risk mitigation expertise. With that, we've already got some traction. We partner with Complete, we partner with Genetic Me, Spacious, and Southern Barter Club. We've got 500 more plus registrations, and we're in talks with all the cryptocurrencies and wallet companies. So now, what are we doing? We're asking for a funding round of about $500K US dollars. In exchange for 15% equity, we'll give you a board seat. It can be a convertible notes or a Series AA preferred shares offering. So the use of funds, we'll have 12 months of runway, primarily for additional legal protections. We want to acquire more users. We're going to do an ICO where we'll probably raise 25 million, and then development operations and just increasing our global use. So with that, you can contact us. We're right here at 424 Clay Street. Reach out to us at AliasID at transactionhub.com. Numbers are up there, or you can just visit the website, alias.id. Questions?
So I understand the push for an Ethereum new token to want to use you to brand and get their Ethereum domain and set everything up that way. I don't quite understand why I would personally want a wallet ID.
Well, the thing with most wallet IDs, and take for example Ethereum, they're offering that as a .eth domain, but it's only for the Ethereum network. And there are tons of blockchain use cases and blockchains outside of Ethereum. So if you're engaging in a peer-to-peer marketplace transaction, you want to send money to someone, you have to manage and maintain a 32-character string,
Yeah.
Your blockchain, your public key. So it's easier to say, hey, I want to send friends, family money, or engage in some type of peer-to-peer transaction using an email address, using a word. As an example, we reserve words like Microsoft, Google, et cetera, where the general public
There's still going to be a 32 key ID behind the word that I pick, though, correct?
Right. It's just a canonical name. So if you think of the DNS system when you purchase your domain name, you could essentially go to an IP address to view your website. However, the domain name shortens that up, and it's more memorable, and it's universally understood. So that's what we're taking that whole concept from a DNS standpoint and just applying that to the blockchain second layer.
Okay.
Could you go into a little bit more detail on your traction? So you're saying you're trying to raise 500,000,
Yes.
and you say you're in talks with some of the crypto wallets, but can you just be a bit more specific?
Sure. Well, we're with Unicoin. We're in talks with Unicoin now. Coinbase, we're reaching out to talk to as well. We've sent out emails to literally all of the actual wallet companies and the coin companies through our cohort 3. So we're waiting on the responses back, and we're actually getting ready to submit our pitch deck and our materials on how this will benefit them. Because again, just like purchasing a domain from GoDaddy, you earn a percentage of the sale if you decide to sign up and be a partner or an affiliate with us. Any other questions?
I think I've already asked my questions.
Sure.
I guess, how does Transaction Hub, I mean, are we just talking about a service of Transaction Hub?
Yes.
Okay.
Yeah, AliasID is our first service for Transaction Hub, which focuses on delivering on-demand transaction assurance and protection for any type of peer-to-peer or blockchain-based transaction. So having an identity, established identity that's blockchain agnostic is of utmost importance. not only identifying yourself, but actually building up a transaction rating and reputation, much like a credit report. But this is focused on only on blockchain-based transactions. Yes, you can link in as many wallets you want using your public identifier because it's a distributed, decentralized network, and we replicate all that data through all the nodes. Great. Good. Thanks.
Hello. Okay, great. Just want to make sure I can use this. Good. All right. Hi, I'm Heidi Peace, and we've got John King over here. We are from HomeSideKick. We are basically we're providing a peer-to-peer mortgage lending platform that seamlessly integrates the borrower and the investor in mortgages on a fully automated end-to-end platform. So, in today's market, what we're seeing is it's very confusing and fragmented all throughout the value chain, with each one of these areas having their own earnings goals and their own operating processes. So what does this result in? Today, what you would think of should be an easy process. Basically, the investor, which can be either an institutional or an individual investor, provides funds, and the borrower at the end receives those funds. Theoretically, that borrower should be able to just pay back that investor with the principal and interest every month, right? But because of that fragmented market that I just showed to you, what really happens is that the borrower ends up paying on an average $240,000 loan, $10,000 in closing fees, a 4 to 6 week close period, and an additional 1.1% premium, interest premium on top of the general interest rate. That's for the borrower. On the investor side, what we're seeing is that there's lack of transparency, something we saw come out of 2008, and there is no real-time access to how their portfolio of investments is being managed, which is critical when an investor is looking to risk mitigate their investments. And lastly, but not least, of that 1.1% rate premium, the investor actually only receives 1/3 of that, while the remaining 2/3 goes back to pay for those costly middlemen in how they securitize those loans. So what we are presenting at HomeSideKick is we want to connect the borrower and investor directly. And we are doing this by providing a simple-to-use automated lending platform. What this results in is lower costs, near immediate transactions, simplified and transparent processes. Our platform sorry. Technology. Our platform, as I mentioned, we are directly connecting the borrower and the investor. So our platform, we are modernizing what is predominantly a paper-based process system using smart contracts. And what we're also providing is a unique, one-of-a-kind, end-to-end solution that provides loan origination, loan servicing, note creation, note investing, and note trading. Basically, what that does is it replaces the need for all of these costly and confusing middlemen. Ultimately, the way that we're saving on costs is that in a traditional loan today, we can see that costs are $8,400 per loan. We're shrinking that cost down to $5,000 per loan and passing the savings on to the borrower, which is $3,400 or 0.375% of an interest rate discount, which in our research and our experience, if you had as low of an eighth of a percent, you would actually sell and close the business. This is a huge revenue opportunity for us. Currently in the US mortgage industry, it's about $1 billion. We're targeting as our beachhead millennials, which represents $5 billion. At the end of the day, though, as millennials grow into this space, we truly see ourselves captivating the larger market. So the competition in today's market, we're seeing that the online lenders are really becoming the market leaders in this space and are also the P2P lenders. Those are both what we're providing. In addition to that, we're providing the unique autonomous lending platform, and we're providing the security and the transparency of blockchain technology. Our revenue model is quite simple. We are getting 0.6% transaction fee from facilitating the loans, a 0.3% annual recurring fee on servicing the loans, and a 0.25% annual fee on managing the funds of those loans. And we can basically provide lower costs because our cost to acquire customers is lower in that we are a digital platform, we have a fixed cost platform, and we are, what's more exciting for us is looking how we can use tokens as an incentive to promote good behavior. We've got an excellent team leading the cause. John Kang, who studied at MIT, has in-depth experience in economics, finance, and mortgage brokering. I studied at Anderson, and I have experience working in secondary markets at AIG and turning around distressed assets and sales. And our director of technology got his PhD at Michigan, and was most recently the director for data forecasting for the University of California system.
Thank you, HomeSideKick.
Thank you.
Can you explain this slide?
Sure, thanks for asking. So basically, this is the traction that we've already accomplished. We are licensed as a bank, and we have also started to develop relationships with the largest mortgage-backed security investors, such as AIG, and we've launched our first blockchain-based application, DocuLock, which is a document management tool.
So when you say you're licensed as a bank,
Yes.
can you expand?
Yes. So by law, if we were considered a mortgage lender, we have to be, even though we really want to take the bank out of mortgage lending. We are licensed right now in Iowa, and we're working on licenses in other states that are blockchain friendly.
Just to be clear, so that's not a bank, though. A bank is a deposit taker.
Yeah, we're not a depository bank. We're a mortgage bank.
Yeah, understood.
So are you then outsourcing the appraisals and insurance pieces, or how are they still, those are things that still have to happen in order to purchase a home?
You're absolutely right. And there are still sticking points. So appraisals is one of them. By law, we have to outsource. We can't be connected. We can't have them as employees. But what we'd like to do is start applying some more standards and metrics and benchmarks across the board. And there are some, we can talk offline, but there are some other opportunities that or other technologies that we're integrating to help speed up that process. And that's the only thing really that will keep us from, we can shrink down the transaction from 4 to 6 weeks down to literally minutes. But because of appraisers, that adds on a day, and then whatever the state regulation requires. Sometimes you have to be holding for 7 days before you can actually make that loan official.
How are you sourcing the people who want to lend money? Like, how are you getting those people interested in lending money for your loans?
Yeah, so we'd like to start off with an anchor investor like an AIG where I used to work, and so I'm having discussions with the head of global banking there. So that's indirect relationship building with family trust offices, large mortgage-backed security investors, and that's right now. It's knocking on doors and picking up the phone.
So if you're not doing more peer-to-peer lending, why do you need the blockchain?
Yeah, so the goal is to actually open that up to individuals rather than institutions, but because the demand for the dollar, the capital amount for all of the loans is so great, we can't see that the individual investors like my mom, who might throw in $1,000, cannot satisfy. So we do need to have those institutional investors, and on top of that, we can layer on the crowd fund, the individuals. So we still consider this crowd fund, but it would be individuals as well as institutions. Thanks for the questions.